That's actually pretty interesting. I'm just testing some stuff out here in the webinar. I'm not even sure that you can hear me. Hey, everybody. Type something in the chat box if you can hear me okay. Because I'll be super happy to hear from you. That sounded weird, didn't it? Let's see if I can share my screen okay. Not sure if I can. I have not started. Oh, look at that. The screen share worked great. Look at that. That's very interesting. I haven't started recording yet, but I'm going to start recording in just a moment. Okay, we got a chat. Okay, great. Screen share okay. Chat is good. Excellent. Fantastic. Wonderful. I need to start the recording. It's kind of fun that you can go live right on YouTube here. Hi, everybody. Welcome. Nice to see you, Chuck. Nice to see you, Pierre. And I'll resume the recording and we'll get started. Hey, everybody. Been thinking a lot about price action lately, as many of you already know, and been trying to work through some ways of using price action with basically very few or no additional indicators. And on the chart today, what we've got are some pivot points, which are great profit targets. If you don't use pivot points already, they're available inside your lifetime membership area in your indicators section, or right inside most charting platforms. And these pivots that you see on the screen right now are purple, and those are monthly pivots. We're looking at a US dollar, Japanese yen daily chart. What I want to add to the chart are a couple of things that I've been playing with either for a long time or a really short period of time. First are grab candles, used primarily and made famous by Rogge Horner, but developed for TradingView with for all of us by Matt Lococo. And you can just search for grab candles inside of TradingView's script section if you use tradingview.com. And grab candles turn the candles red or blue or red and green, depending on bullish and bearish markets. And the red candles are bearish and the blue candles in this case are bullish. What I've also been playing around with lately, and this is more important for the purpose of our webinar today, are exhaustion bars. And I've been playing around with this exhaustion bar by Lele DC or whatever. I don't know what this person's name is. And been showing these major and minor, but mostly the major reversal bars, which in some cases work great and in other cases do not. And what I want to do in our session today is talk a little bit about maybe using, not improperly. Okay, maybe it's improper, but just using these formations for the purpose of maybe trading with the trend as opposed to against it. And some of the work done by my friend Joel is influential in some of this. And I think, Joel, you'll see some of the stuff that you've been playing around with your robot Coco and pivots or other types of stuff. I think you'll, or what do you call them? You call them not anchors, not pivots, not whatever they're called. But anyway, you'll get the idea of what we're talking about here. On the screen in front of us, you'll see red dots on top of candles that are colored blue. We're going to get rid of Knoxville divergence, which I don't need on this. Well, you know, why don't we just go ahead and keep it there for a moment? Okay. Right here in the center of the chart is an exhaustion candle with a red dot on top of it. Now, I'm not saying that this should be a reversal candle. I'm not saying that that qualifies as any kind of candle pattern that we must obey. But I am going to say right out in the open here that that candle pattern may be the clue to trading with the trend. And let me show you what I mean by that. So these exhaustion bars are typically patterns which emerge only when price is showing that it might reverse, like bullish engulfing, bearish engulfing, and huge candle shadows that show that the market has exhausted its trend or whatnot. But in this case right here, we may actually be looking at candles that don't say that the price action is exhausted, but may say that price action is going to continue. So what if when we get an exhaustion bar, an engulfing candle, or a doji, or a hammer, or a star, or some of those types of traditional patterns, what if instead of going against the trend, what if we decided to go with it? What if we drew a line across the top of the highest point that the price action had been, and then on a break above that, we went ahead and bought, maybe for just a quick trade, maybe for a really significant trade, and maybe we even used a pivot point as a stop loss area and tried to hang on for some really big trend trades if price could continue. So we would usually, in a situation like this, we would usually take this exhaustion bar and think about reversals. But maybe instead, when we see that exhaustion bar, we think about a continuation on a break higher. So if price breaks out higher than the highest high that the exhaustion bar made, while the grab candles are telling us that the market is bullish, what if we went ahead and we bought? And what if we just kept on doing that as the trend continued? And then finally, we run out of blue bars, and the trend is, according to the grab candles anyway, the trend is over. That bullish trend is over. And we get some bearish divergence at the top. And maybe in combination with everything else that we've looked at, maybe we go ahead and say, all right, well, this trend is exhausted and it truly is over. And then the grab candles change color, and then, oh, well, maybe now it's time to start trading in the opposite direction. So maybe if we get a exhaustion bar that is colored red or blue, signifying a grab candle trend, maybe on a break beyond the lowest low or beyond the highest high of that bar, maybe we go ahead and we trade with the trend. And in this situation here, where the box is overlaid on top of the price action, maybe we ignore this one. I'm going to color the border of this red so we can really see where it is that we're looking. Okay, so maybe we set the trade up, but it never really breaks lower, and so we ignore it. And then in this instance, right over here to the right, we get a blue grab candle or a bullish grab candle, and we get the high of that candle, and we mark a level above that, and then maybe we say, all right, that above that we're bullish, and then maybe all of those fail, but we finally get maybe an opportunity down here. So we get a red candle and we sell it below the lows. Stop loss, maybe we put a stop loss closer over time, but maybe we put a stop loss behind the monthly pivot, and then we just short the ever-loving crud out of that. Maybe that's what we do. I don't know. But I like the way that there seems to be a fairly consistent profit available on these setups. There's a blue candle that's supposedly a reversal, but it's a continuation. And here is a bearish candle that is supposedly a reversal, but maybe it's a continuation. And maybe not. I mean, obviously here we do travel in the opposite direction. So I'm going to look at a few more examples of this. It seems like not every single time, but in many of these instances, if it breaks the high within 1 or 2 or 3 candles, it seems like there is a nice continuation. That's a really big move here. Look at that. That's a really substantial move lower. And then at the end, we print a reversal candle, but price doesn't break lower, and price does reverse. And so what? And good for price. You know, I'm happy for it. We got a lot of trades there, especially considering that we're on a daily chart. That's a bunch of trades, some of which have some pretty significant movement. Now, what would a target be optimally? I mean, we could go for a really small amount of profit and probably get a really high win percentage, but our risk to reward ratio might be messed up, right? So we might be able to say, well, almost every single time we get 20 pips out of that, but maybe because we get 20 pips out of it very consistently, we have the occasional loss, right? Maybe this one over here to the right doesn't get 20 pips and then it reverses. And then we're just stuck holding on to a trade for a significant period of time. And that could get really ugly and sad and disappointing and whatnot. There's another example here of price moving higher. And here's a good example of exactly what we would be worried about. We get a reversal candle, an exhaustion bar. It's supposedly a bullish trend, and yet we do break, and we break higher, and then we just fall and move against. And that's just it's a bad situation. Here's a bearish move that doesn't last very long. And so the problem is, and it's been the age-old problem, is risk reward versus high low probability trades. That you get a system that has a very high probability of success if you have a really bad risk to reward ratio. And if you have a really spectacular risk to reward ratio, like, I don't know, 20 units of profit for every 1 unit of risk, you probably have a very low win percentage. So you're going to stop out a lot, but when you get a win, it's just gigantic. And that might be exactly what this system does best, is ride the winning trades for a really long time with a really tight stop. So maybe we trade the breakout higher and have a stop loss of something really insignificant, like, I don't know, 30, 40, 50, 60 pips of stop loss, but 200, 300, or 400 pips of profit on some of these trades. And that might be an interesting way of looking at it. So I looked at a bunch of different currency pairs today. This is the Australian dollar, US dollar. These are all daily charts. I am thinking more and more about using daily charts and benefiting perhaps from not having to look at it every day or as often. And you might get a lot of stop outs, but then when you get a win, you might get a really, really big win. Some of these could be just absolutely phenomenal moves in one direction or the other. Okay, so that's area number one, continuations, trends. That's area number one that I was really interested in looking at. Area number two that I was interested in looking at concerns reversals and candles. So here, I wanted to look at an example first that didn't work out very nicely. So let's say we get a bullish divergence plus an exhaustion bar or candle. Well, it's not necessarily a loss. I love the idea of a stop loss directly below the exhaustion bar and a profit target at the nearest monthly pivot. I love that idea. And I'm not sure how often this is going to happen, especially on a daily chart. It seems like this might be uncommon at best, like really uncommon and not happening very often when you have within 1 or 2 bars or candles, a divergence and an exhaustion bar. And this is exactly what we have in this case here. So we have an exhaustion bar, a bullish divergence, and then just a spectacular move higher that hits the nearest monthly pivot. And then the month previous's pivot and the month previous to that, even that pivot all the way up there. And that seems to me to be a pretty spectacular and uncommonly good risk reward ratio. But I don't know how often these types of setups are going to occur. You get a lot of divergences that work nicely that don't have that combination. Here's a bearish divergence with an exhaustion bar on the very edge, the last candle, and it falls very neatly all the way down to a monthly pivot. So what I wanted to do today is cycle through all of the currencies, the crosses, and, well, everything, and just see if there's any of these at all currently, if there's any bearish or bullish divergence on a daily chart. I'm not sure that there is. Got a lot of lines and stuff drawn here. Wow, the euro pound is hitting its monthly pivot right now. That seems like a really great area. Is there any bearish divergence on this right now? Are you kidding me? No bearish divergence here? Seems like the euro pound would be an interesting sell trade. Looking for divergences and don't see any. The most recent time that I see it is right over here. You know, anything similar to what we would look for is right there. That's really nice. I don't think these are going to happen very often. I think you're getting that idea, which that doesn't scare me or anything. What about the Turkish lira? You got anything for us, Turkish lira? No. Dollar Canadian? No. Dollar Swiss? No. US dollar Japanese yen? No. So there's almost nothing out there right now. So it seems like it's very rare. Super rare. All right. Wow, I guess the problem with that would be this isn't going to happen very often. Suppose we could switch things around and look at, you know, chart time frames that are, you know, the 4-hour charts and whatnot instead, and maybe get a larger number of setups that we could possibly use. You're still not going to, even from a 4-hour chart, you're still not going to get a lot. Look at that one. A really nice reversal when those divergences line up. Daily divergences are fantastic. So neither of these two qualify as trades. Both of these bullish divergences are ignored. I'm just going to move back in time. I wasn't planning on looking at the Australian dollar Swiss franc, really. Wow, that is pretty nice. What a nice combination here. I really do like that. And there's one. Well, it still reverses up to the monthly pivot and definitely the weekly. Might need a little bit of a wider stop. Look at that. That's another really nice one. And look at this one. That's really cool. Wow. All right, that's got a nice drop right there. That's a beautiful reversal, but no exhaustion candle. That's another reversal back lower. Wow, I think there's some there's something interesting and maybe worth pursuing here. Definitely something worth taking a longer look at. I wonder how often this would set up, if it would even give us enough trades to really make it worth our while. Well, we're definitely going to find out because we're going to spend a lot more time on this kind of thing. I look forward to more of these price action related webinars, and appreciate your comments. Love looking at this stuff, especially the longer term stuff that that we really don't spend a lot of time looking at. We've got so much stuff and so many indicators that we look at. We don't often give a really good chance to some of the longer term charts. Look at this one. This one's terrible. This is really bad. British pound Canadian, bullish divergence combined with an exhaustion candle, and it just doesn't go up. This another bullish divergence, another bullish divergence, and another one. And those eventually work out nicely, but that is a really significant long time. Well, it's only a couple of weeks. That's not really that bad. That's not that bad. So you could stop out repeatedly on this without really major significant damage. That's not bad. I don't think I would mind that. Okay. Thanks for being here, everybody. Super happy to spend some more time with you today, and look forward to talking about this next week with you.